Welcome to Yahoo Finance Live on this Friday afternoon. I'm Shauna Smith along with Dave Brace. Let's get you up to speed on the market action as we close out the trading week. You can see the Dow off just around nearly a 100-point drop for the Dow today. S&P also under a bit of pressure, off just about 0.1%. Taking a look at the Nasdaq 100, that's holding on to gains up just about 0.1%. Taking a look at how we have traded though over the last week, you're looking at gains for the Nasdaq. The Nasdaq still up over the past week here since Monday. When you take a look at what we're seeing play out for the S&P is still off just around almost 2%, as we take a look at the 5-day chart. S&P off nearly 3% over the past 5 days. Dow also in the red. Dow having the worst week that we have seen since just about September. So some numbers here to keep in mind as we close out the week. Taking a look at the yield, and more specifically the 10-year yield pushing to the upside today, up just about 8 basis points at 357. It is, though, to the downside over that weekly basis. 30-year yield, the same scenario there, up 9 basis points to 354. Taking a look at the sector action, what we're seeing more specifically today, and that is a bit of a mixed picture. Communication services, real estate holding on to gains, the biggest laggards in healthcare and energy. Taking a look inside the Nasdaq on a 5-day basis, some of those largest tech giants among the biggest underperformers in the market this week. You're looking at Alphabet with the loss of just around 7%. Microsoft off over 3%. We got the news yesterday that the FTC is looking into suing Microsoft over its deal to buy Activision Blizzard. That, of course, could be a concern here for investors over the coming months. Apple off just around 2.5%, as well as Amazon and Tesla off 7% this week, Dave.
That's one that stood out to me, and down 54%.
Yeah.
This year. Had a little bit of a bounce back today. Thanks, Shauna. Let's get you up to speed now on some key economic data out today, excluding food and energy. The core PPI, which measures what companies get for their products, essentially up 0.4%. That is hotter than the expected 0.2%. A 38% surge in wholesale vegetable prices helped push the food index up 3.3%, the same number by which energy costs declined. Now, the consumer price index is due out Tuesday morning, so we'll get a better glimpse. But we also got an update today on consumer confidence. The University of Michigan index rising to 59.1 from 56.8 in November, far better than the expected 53.3. Joining us now to discuss this and the state of the private equity market is Scott Sperling, Thomas H. Lee Partners co-CEO. Scott, nice to see you. Let's talk about that economic data we got out this morning. If you're the Fed chair, how do you look at it?
I think you remain concerned about inflation as something that will be more persistent than we like. We know that inflation is one of the more insidious problems in the economic sphere. People talk about the toothpaste getting out of that tube and the impossibility of getting it back. I think when we look at the various elements of inflation, one has to continue to be concerned about wage push inflation, about the fundamentals behind some of the key commodities and inputs into our economic activity, principally policies in the United States having to do with not just the energy portion of oil and gas, but also the fact that those are major feedstocks for a lot of industrial products. So I think that there are fundamentals that one has to be concerned about. The thing that has been holding inflation back to some extent has been the fact that I think people anticipate a recession. Economic activity in many ways has slowed down in a number of sectors, and that is putting a little bit of a cap on it. How the Fed balances those two things, I think, will be really interesting. It may be that the market's not wrong in the sense that the Fed will ease up on the amount of interest rate increases that they do at each of the appropriate meetings to that 50 basis point next time, maybe to 25 basis points after that. But we may have these higher interest rates go a bit higher than the market's currently predicting, and they may sustain for longer than the market is currently predicting.
Scott, when it comes to inflation, are you confident that we have seen peak inflation? Some of those stickier parts of inflation, how long do you think that is going to remain?
I don't think we fully absorbed, the wage push inflation that we're seeing. You can look at some of the contracts, particularly some of the new union-based contracts in transportation in particular, and those are reasonably high rates of increases. They may be justifiable given inflation of the cost of everything, but we should not underestimate the impact that will have on sustaining higher wage inflation rates. The amount of spending that we'll see into things that increase productivity is going to be very important in terms of managing through some of these things. Labor shortages are still a big issue in a lot of different parts of our economy. Automation is going to be really important in helping to close some of those gaps, particularly for less attractive types of activities for humans. And we're seeing a lot of that occur. But we're going to have to be really careful as we manage through this. And again, the fundamentals of things like regulation tends to raise the cost of doing business. That has increased dramatically. And obviously the energy policy, when we're talking about carbon-based fuels, particularly in the United States, but also around other parts of the world, may be problematic from that aspect.
I know nothing gets you out of bed, Scott, like an Elon Musk tweet. He just now says if the Fed raises rates again next week, the recession will be greatly amplified. Now, again, higher rates bad for Tesla. They're down 54% this year. Set that aside. What do you think about a recession and about that prediction?
Well, I think there are very, very few people at this point who are not predicting a recession sometime in the next 14 months. I think the most recent economist survey, 100% of the economists are predicting that. Now, that may be the best news we can have because it's not likely that 100% of the economists are technically right. But nonetheless, let's assume that there's a recession. I'd also look to, a comment I think Larry Summers made that I don't know why we talk about soft landings because we haven't had one. I think that's a paraphrase, but I think that's actually accurate, that we tend not to have soft landings. They're nice in concept, but normally it's pretty rough. The question is duration. And the more we get ahead of inflation right now, I think the shorter the duration of the economic problems that we might have will be. The markets probably still have another leg down or two. There will be some corrections. There will also be some great buying opportunities there. I know that as we look at opportunity sets in the private markets, they're becoming increasingly attractive. There has been a major migration, as you know, in our economic activity to the kinds of companies that have superior business models, more reliable revenue streams, the so-called annual recurring revenue type things, and business models that tend to do better in economic downturns. We are seeing more economic activity come back to the United States, also back to Europe. The nature of investment that we're going to be making in things like semiconductor are crucially important and will be a source of economic stimulus. So I think if we can get inflation under control and we get through the next 12 to 18 months, then I would hopefully see a strong uplift after that.
All right, Scott Sperling, great to have you. We hope to have you back here on Yahoo Finance. Thanks so much for joining us this afternoon. Well, we are just getting started. Senator Kyrsten Sinema shaking up Capitol Hill. Find out what her becoming an independent means for the Biden administration. Manhattan's rates remain sky high, but we're starting to see some cooling in other parts of the country. We will break down those trends in a new study revealing how much time Americans spend on TikTok, and the number may shock you. We've got all that for you. Don't go anywhere.
Registering as an independent and showing up to work with the title of independent is a reflection of who I've always been. And it's a reflection of who Arizona is. It's a reflection of the folks that I talk to at the grocery store, hear from at the park. It's who we are as a people. We don't line up to do what we're told.
Senator Kyrsten Sinema breaking with the Democratic Party and registering as an independent, writing in an op-ed for the Arizona Republic that she hopes to, quote, work proudly with senators in both parties. Let's talk about what this means for Democrats. We want to bring in Yahoo Finance senior columnist Rick Newman. And Rick, I guess it's safe to say that this complicates things for the Democrats just a bit.
It does, although I'm not sure this is as big a deal outside the Beltway as it is inside the Beltway. So right now you have Democrats are just outraged about this. How dare you, is their attitude toward Kyrsten Sinema. But on the other hand, she's talking the way a lot of voters actually think. I mean, if you look at voter affiliation polls by Gallup and others, there are more people who say they are independent than who say they are either Republican or Democrat. Now, many of those independents lean either Republican or Democrat, and I think it is safe to say that Sinema will continue to lean Democratic. She has said she is not becoming a Republican, and she doesn't plan to vote with Republicans. She just wants to become independent and disassociate herself with the Democratic Party. If I were the Democrats, I think I might say maybe she's got a point. Maybe there are too many extremists in the Democratic Party because there are a lot of voters who feel that way. At any rate, there's not much legislation that's going to pass Congress or Democratic legislation anyway, because Republicans will control the House and they'll be able to block it. So I'm not sure this means all that much for legislation during the next 2 years, but it's going to get very sticky come 2024 because she's up for re-election. And there's a huge question about whether the party will back her as a candidate or whether they will not back her at all. And that gets to millions of dollars in funding, and whether you could actually end up with a three-way race in Arizona in the Senate race there in 24, which could actually tip it to a Republican. So it'll be very interesting in 2024.
Well, then that makes me think maybe this is a step towards the Republican Party. I'm curious to think about that because I saw Mitt Romney jump out immediately and tweet Kyrsten Sinema as a tremendous force in the Senate and the country is better for it. Might she just keep going in that direction? Could Joe Manchin follow?
Oh, the Republicans would love to get her, without a doubt. I mean, if you think about it, so with Sinema as a Democrat, the Democratic Party has now that we're all settled with the midterms and what the next Congress is going to be, they would have a 51-49 edge. And that's important for a lot of technical reasons in the Senate. So they gained a seat in the midterms. But let's say she flipped and went over to Republicans, it would be 50-50. And by the way, Republicans have also invited Joe Manchin, the centrist senator from West Virginia, to join the Republicans, in which case it would go 51-49 to the Republicans. But as I said before, Dave, Sinema said she's not becoming a Republican. That's not her interest. And I think, honestly, if her problem is she doesn't want to be associated with extremists in the Democratic Party, you got plenty of extremists in the Republican Party, too, on the other side that she may not want to be associated with. So, she's been an enigmatic senator ever since she's been in Congress. And she's, continuing to go her own way. So they're just going to have to deal with her.
So President Biden dealing with Senator Sinema leaving the Democratic Party, also dealing with persistently high inflation, the thought that the economy is going to continue to soften, some risk there of recession, lots of debate about whether or not we still have a chance of a soft landing. We just heard from Scott Sperling, our markets guest at the top, saying that we tend not to have soft landings. Is there still a chance, though?
Yeah, there is. I think there is actually a chance of a soft landing. And I'm just looking at the small picture, not the big picture, but within the last couple of weeks, the economic data has been pretty encouraging for President Biden. So we all know that gasoline prices first, way down from the $5 peak in June. They're now around $3.30. I mean, that's a remarkable fall. And that some of that is going to show up in the inflation report for November that comes out next week, one day before the Fed announces what it's going to do on rates. But not all of that decline will show up in the November report. So that means some of it will carry forward into the December report. Also, natural gas prices down from their peak over the summer. Rents are actually starting to, just now within the last couple of months, starting to decline ever so slightly. So the inflation is going in the right direction for President Biden and for the Fed. Now, the question is, we don't know when inflation's going to stop, where inflation's going to stop. We don't know how much softening there's going to be in the economy. And there's such a lag between the rate increases the Fed does today and its actual effect on the economy. I mean, it could be a 6-month, 12-month lag. So as our prior guest pointed out, almost every economic forecaster does think we're going to have some kind of recession in 2023. Will it be mild or worse than that? Who knows? But at the moment, things are actually going okay for Biden.
Yeah, and he's got inflation 4 to 6% through the end of 23. Senior columnist Rick Newman, good to see you, man. Have a good weekend.
Bye, guys. You too.
The Biden administration is accusing Meta of trying to buy a monopoly in the metaverse. Here with more on this is Yahoo Finance Tech reporter Ali Garfinkel. Ali, good to see you. What's the latest drama here with Meta?
Always good to see you, Dave. I feel like every week we kind of just check in, we tune in, and Microsoft couldn't have all the fun, right? So yesterday, the FTC kicked off its trial where it's looking to prevent Meta from buying an app called Within. It's a VR app developer known for a fitness app called Supernatural. Now, the FTC is arguing that this acquisition is going to help Meta set up a monopoly in fitness and VR. Now, Meta, on the other hand, of course, they're saying they have serious competitors on all sides, mentioning TikTok, Apple among them. And what they're saying is that whether it's fitness apps, VR, they have competitors. So we'll see what happens here. This is a case that Meta has actually already failed to get dismissed, Dave. The other thing, too, is that FTC Chair Lina Khan has been very proactive and vocal about the fact that she believes big tech needs to be reined in, win or lose in some of these trials. So I'd say there are sort of two things to watch here, Dave. The first is that CEO Mark Zuckerberg is expected to testify in this trial. So that could be interesting. The other thing, too, is how is this standoff going to affect Meta as it's coming off an incredibly difficult year? We've talked about it a lot on this show. It's been a difficult year as they have tried to pivot to the metaverse as the economy's taken a downturn. So in the end, for me as a former M&A reporter, one of the things I'm wondering about is how this is going to affect M&A for Meta and big tech as a whole. And we know Chair Khan is looking for ripple effects down the line. So we'll have to see how it plays out.
Stock down 65% this year. Ali Garfinkel, thanks so much. Appreciate that. Coming up, we'll bring you the latest on a big executive shakeup at Warner Brothers Discovery. And shares of Netflix are surging following a pair of bullish analyst notes. Find out what they're saying when we come back. Home prices and rents continue to cool off across the country, but not right here in New York City. The nation's largest rental market saw the median monthly rent tick up. That number, and it's a big one, $4,095 from $4,000 in October. The average rent in Manhattan, an eye-popping $52.49, up 19% year over year. Francis Katzen is with the Katzen team at Douglas Elliman here in New York City. Boy, those are some shocking numbers. Nice to see you, Francis. Is this an aberration or the beginning of a new trend?
You know, it's a really interesting time. We would think, based on inflation, that in some way we would see some softening in the rental market, but it's just not happening. I suspect because of that inflation and rates going up, it's put all of the would-be buyers into the rental camp, and the rental market has gone sideways with a medium blend now of $5,300 for a one-bedroom from $4,000. Insane.
It is insane. It's hard to wrap your mind around. Francis, when you take a look at, I guess, any end in sight to this, because mortgage rates, while they have come back over the past 4 weeks, they're still very high, especially when you compare it to what we've seen over the last 2 years. So it doesn't seem like this trend is going to end anytime soon.
I would be doing a disservice to predict it, but I will say this. I do think that the rates are going to come down somewhat, and I think that's going to push people back into the sales market. However, I do think that New York is a huge driver for new market and new business and new jobs. And I think that's the new trend that's happening. It's sort of absorbing all of that inventory, creating that tightening. I mean, we have less than 2.4% vacancy rate in the month of November, which is an off-peak season.
New York City, always not the best barometer of the country, but I am curious about the impact of rates beginning to tick back down. Are you seeing sales pick up, and what are the trends here in the city?
Great question. I mean, I think that the philosophy right here in New York right now is that people are going to buy. There has been a capitulation in the market overall over these past months. And I think that if you do know how to structure your rates, meaning going through a portfolio lender, which are hyper competitive against these more vanilla loan banks, you can get really competitive rates, especially if you're going to hold on to the asset for 4 to 7 years. You can buy down the rate and actually make it work for you.
Yeah, buyers getting a little bit more creative in this environment. Francis, is this consistent, what we're seeing play out in New York City? Is this consistent with what we're seeing play out nationwide, or does that vary a bit?
I think it's varying. I think it really depends on the actual adjustments around the sales market, around the country. And I think we're seeing quite a softening. I also think the banks need to lend, and I think it's going to be up to them and the surrounding states to decide how they want to get creative as well. New York's always been a little bit more on the edge, but I do think overall people want to get out of renting and they want ownership. They want to own equity.
Largely speaking, the market has been relatively frozen by the rates on both sides. You say this is a good time to buy, though. Why?
When there is fear and uncertainty, there is negotiability. And when there's negotiability, there's opportunity. You do not want to be buying when everybody else is buying because there's no value add to that. So if you can construct and find a way to get in now, it becomes much more advantageous long-term, performance-wise.
Francis, when you take into account what needs to happen in order for supply, I know obviously when you take a look at those vacancy rates on the rental side, at least in New York City, clearly there's just nothing on the market. But on the buyer side of that, is that consistent? And how long until you think that picture begins to improve?
The buy side, I think that there's going to be a consistent opening, but I think the misconception here is that if they wait, it'll get more opportunistic. And my response to that is there's only so far a seller will go to drop their price, at which point they simply take the unit off the market. They're not going to sell below a certain threshold. So if there is that softening, it's that moment to go in, not to sort of hedge and predict when, quite frankly, I think most sellers know what their values are and are not going to go too far down.
And lastly, here in the city, largely speaking, there was this exodus, a mass exodus, and primarily to Florida during the pandemic, and certainly parts of Connecticut and New Jersey as well. Has that begun to reverse itself? Where are the buyers coming from?
That's a great question. It has reversed itself. I think that people are realizing that even though they're in Florida, they may want to have their children schooled in New York City, or that the jobs are now fully performing in person and they can't do remote. And while I recognize it's a nice tax break, there are plenty of other places right now Texas, for example, is tax-free. There are many different ways to do this. And I think people are now realizing that people coming back to New York are going to get the best value because the pricing has come down. There's an opportunity to get in and get big and more space when they were priced out before.
Certainly is a lot of demand for New York City right now. Francis Katzing, great to have you. Douglas Elliman, thanks so much for joining us. Let's take a look at shares of Warner Brothers Discovery because that stock up just about 3% today. The move higher coming after we got news of more cuts at the company. Alexandra Canal has been following this story for us. And Ali, this time looks like the shakeup's coming from the executive ranks.
From the executive side, a lot of these names are from the Discovery side of the business. And the key word here seems to be streamlining. That's in all the internal memos. It comes amid these larger restructuring costs. If we take a look at those executives that are now departing, we see Nancy Daniels. She oversaw channels at Discovery, TNT, TBS. We also had Jane Latman. She led the company's HGTV and Food Network divisions, Matthew Butler from the Travel Channel side, and Scott Lewers, who ran franchise series expansions. They are all out at this point, and it adds on to other departures that we've seen in recent months. For example, the former head of DC Film, Walter Amada, he exited the company in October, and that marked the 5th motion picture studio executive to depart the company since Zaslav's takeover. And David Zaslav, he's been very aggressive when it comes to cutting costs. He is aiming to cut about $3 billion of costs over the next 2 years. We've seen layoffs at the company, most recently at CNN. We've seen the scrapping of several projects. Patty Jenkins, Wonder Woman 3, that broke earlier this week. The Hollywood Reporter saying that movie is dead at this point. So just a lot of speculation about where this company goes from here. And it just really underscores the complexities of this merger. And although the stock is up today, it is down more than 50% year to date.
Another stock up is Netflix, and it's up on some analyst notes. What are we hearing?
Yeah, a lot of Wall Street optimism right now. We had a big upgrade from Wells Fargo. Cowen also upping its price target, citing Netflix as its top large cap pick for 2023. On the Wells Fargo side, analyst Steve Cahall, he cited profitability should improve with the addition of the ad-supported tier. He upgraded shares from equal weight to overweight, also upped his price target to $400 a share from $300. In addition to that, we have that crackdown on password sharing that should help aid revenue and be a catalyst for growth moving forward. And then on the content side, and we have seen content improve through the back half of the year. We had Wednesday, Dahmer, the Jeffrey Dahmer story doing really well, The Watcher, and then to end this year, we have Glass Onion, the Knives Out sequel coming to the platform on December 23rd. And I think into 2023, that's going to help subscribers in the end. So this has really been a comeback story. It's kind of crazy to see the share reaction. Over the past 6 months, it's up 65%, even though it's down year to date.
I know, it's still up 46% year to date.
In that period where everyone was burying them and talking about the sub loss and the first back-to-back quarter sub loss, it feels like they've kind of survived this and grinded through it, doesn't it? And the comeback story is on.
It seems that way. It seems Wall Street's happy about this. That's aiding investor sentiment. So I think heading into 2023, they're in a really good position.
We'll see whether or not Netflix lives up to Wall Street's expectations here in the new year. Ali Canal, thanks so much for breaking that down for us. Well, coming up next here on Yahoo Finance, DocuSign shares are soaring this afternoon. Look at that, up just around 14%. Wall Street analysts are starting to weigh in following that strong earnings beat after the bell yesterday. More on that when we come back. It's time for our triple play. 3 stocks that we're watching in the final 30 minutes of trading for the week. We have DocuSign, Lululemon, and Paramount. Let's start with my pick, and it's DocuSign. Shares soaring this afternoon, up just over 14%. The move higher coming following its earnings beat. Billings growth was a standout in its most recent third quarter. And because of that, analysts are getting a lot more positive on this stock. Piper Sandler upgraded DocuSign to neutral from underweight. Citi raising its price target to $72 a share from $59. Wedbush writing in a note today that DocuSign is now, quote, right on track to meet long-term targets. So certainly this pop today, very welcome by the street. Josh, so the year-to-date picture, very, very different, with shares still off just over 60%.
I think that's why we're seeing that pop, right, Shauna? Shares off over 60% over the year. And remember, this was a big pandemic play, right? This stock used to be over $300. It's selling at about $50 today. And so I think that's sort of what you're seeing. And reading through that Wedbush note from Dan Ives, one thing that stuck out to me is it seems like maybe now is the moment to start seeing the recovery story in DocuSign and see potential to build back up. Not build back up toward $300, but build back up towards something profitable for investors and sort of create that smaller story after the big fall, which is something
there's some middle ground there that Wall Street would be very happy if the stock got back.
We'll see if it happens 2 quarters in a row, right? And my play today is Lululemon, a reverse story from what you were just talking about, Shauna. Shares down, worst day since March 2020. Shares sinking about 13% throughout the day here today following the company's third quarter earnings release. It was a mixed bag for Lululemon report with beats on the top and bottom line and revenue raising 28% year over year, but gross margins coming in lower than expected. The company also projecting fourth quarter earnings per share and revenue on the low end of Wall Street estimates. Now, analysts were mixed on the stock. Piper Sandler, Goldman Sachs, and Wells Fargo all raising targets, but Goldman Sachs also, Dave, removing the stock from its conviction list. Analyst Brooke Roach noting that moving forward, accelerated growth and outperformance versus the sector may be harder to achieve. And I think that's the narrative we've heard from a lot of the analysts today is Lululemon's a great company. They've absolutely crushed it. How do you keep crushing it at a consistent basis in this environment? That seems to be what is kind of taking the stock down today and is a little bit of the
broad
concern.
takeaway. Right. And again, they took it from conviction buy, still a buy.
Right.
There's still a buy on the stock. And I'm just surprised. Are you shocked at how far shares have fallen on that report? There was a lot to like in that report. Now, granted, inventory is up 85%. One number we didn't talk about, revenue in China up 70% year to date. Best Black Friday ever in terms of revenue and in-store traffic. And they talked about their shoe vertical, which just dropped. Haven't even begun to see the upside from that. Again, I just feel like there's a lot more to like in this report than you would be led to believe by that number.
Sometimes it's about the expectations, though,
Yes.
too, right?
Hey.
They say best Black Friday ever, but they still don't. They come in on the low end of Q4 estimates. That includes Black Friday.
Yeah, and I think a lot of these, I mean, we've been talking about it so much in terms of this most recent earnings season. A lot of it has to do with expectations going in, and also so much is being placed on the guidance. So the fact that the guidance fell just a bit short, third quarter was extremely strong. Even the commentary from the CEO remained very, very positive throughout that earnings call. But I think just that the fact that they fell a little bit short there on guidance and the gross margin miss was a big reason why we're seeing that reaction today.
Victim of your own success comes to mind a little bit here with Lululemon. All right, my play is Paramount. Interesting news today from the local news front. A platform Viewit, that's VUIT, reached a deal to add content from 13 CBS owned and operated local news channels, which include major markets right here in New York City, as well as the opposite coast, Los Angeles. Viewit is a free ad-supported streaming service, which has seen its audience grow exponentially in recent years. Pay TV penetration, though, is down to levels not seen since 1993, according to MoffettNathanson. They say the Q3 loss of 655,000 subs is the largest third quarter loss ever. Last year's was 617. The year before, 91,000 in Q3. So we are seeing the cord cutting just facilitate at unthought of levels. Paramount's down 40% this year. It is a big riser today, as you can see there, up almost 6%. Is local news going to move the needle? No. I am a big proponent of local news, and I just want to urge everyone out there to check out local news however they can to keep democracy alive, my friends. That's my advocacy. I'll get off my soapbox now.
No, I like it. And you're bringing the spotlight to local news. It's an important story to tell. It is interesting, though, I think when you take a step back Nasdaq. Paramount saying that they are going to try to be diversifying their revenue base. This is one example, not going to move the needle, but they are finding new ways to bring in revenue, especially when we heard Bob Bakish time and time again talk about the softening ad market. He reiterated that earlier this week. That sent shares of Paramount down nearly 10% earlier this week. So I think it's a step. We'll see what it does. But Paramount outperformance today, something to note at least, up almost 6%.
All right, that'll do it here. Josh Schaefer, thank you for playing in Triple Play. Coming up, Amazon getting some inspiration from who else? TikTok, as it debuts its latest shopping tool. And a new study suggests companies should be paying more attention to YouTube. Find out why, next. Amazon is taking its in-app shopping experience to the whole nother level. The company launching a TikTok-like feature called Inspire. Here's how it works. You navigate to the Amazon shopping app and tap the light bulb icon. You're then able to pick from over 20 interests like pets, makeup, and gaming. Your selection gives you a customized feed of products. From there, you can browse pictures and videos of products that you can then buy directly from the app. Amazon's rolling out the feature today to select customers in the U.S., and it's coming to all U.S. customers in the months ahead. Shauna, what do you think? Are you in?
Oh, I am in. This is genius to me. My big question is, why hasn't Amazon already rolled this out? Because it seems like a no-brainer, at least to me. We know Amazon has had more and more partnerships over the past year with influencers. A number of us have seen that, in fact, to take place on Instagram. Amazon, though, this feed, and I just saw the video that we just showed everybody, it seems so much easier shopping through this feed than it does on Netflix, because Netflix often takes you to a third-party site, where Amazon, you can do it all right
Do you mean
there.
Instagram?
Instagram, yeah. What did I say?
Netflix.
Oh, Netflix.
I was wondering if there was something
No, Instagram, excuse me.
Yeah.
When you're shopping on Instagram, it takes you to a third-party site. Amazon, it's all right there, which I think everyone is looking for it to be as easy as possible. So this is a huge win for Amazon, and it's also a huge win for influencers as well.
I'm a sucker for an Instagram shopping. I mean, I buy stuff on Instagram all the time. So this seems like such a natural segue. And to relate this to what we talked about earlier in the week, it was the year in Google search. They just gave all the most popular answers. The most popular answer to how do I become a was Amazon influencer. We're talking globally. That was the most common profession people were looking to figure out how to become. Now, I didn't even know an Amazon influencer was a thing until recently. That's where we're headed. I don't think people are going to jump on this platform just yet, but for Amazon to get there
it's huge.
ahead of the curve,
and
boy,
it's just
brilliant
another
move.
example of Amazon taking over even more of our daily life.
I
Spending
fear.
more time on this app.
And get more AI, more data from us.
I'm fine with it. If it makes my life easier, I am totally fine with that aspect of it. But once again, Amazon really trying to capitalize on what it seems like is the TikTok trend, a huge win here over the last several months. All right, well, speaking of TikTok, it's one of the many topics covered in the latest consumer trends report that we just got from the New Consumer. Here to tell us about it is New Consumer founder and editor-in-chief Dan Fromer. Dan, great to have you. Let's start with TikTok, the popularity of it. It was downloaded, over 4 billion times since 2018. Talk to us just about that and who is exactly downloading TikTok.
Right. Well, social media is now almost 20 years old, which is a crazy thing to say. But Facebook, kind of famously, very much a thing with millennials and older Americans. But we've seen that Gen Z, the youngest, not the youngest, but a younger group of American consumers who are kind of entering their prime age of their professional careers, their prime spending era. So we pay a lot of attention to them. They really love TikTok. They love TikTok in a way that previous generations don't. We asked a poll of 3,000 Americans last month, if you were trapped on a deserted island and could only use one social media site basically forever, which one would you pick? And overwhelmingly, older Americans, not even old people, but millennials and older, chose Facebook. 53% of those people chose Facebook in our survey, whereas TikTok really resonates with the younger consumer. Gen Z chose TikTok as their number one. 26% chose TikTok, Instagram after that, and then Facebook third place after that. So really a big difference there between Gen Z and the rest of the US consumer population. By the way, hat tip to the great analyst Mark Mahaney for first, I believe, entering that survey into my life. He started asking that survey question many years ago, the stock analyst, and I thought it would be fun to redo that one with today's era of social networks. And what's great about TikTok, or what's interesting about it, going back to the thing you were just talking about with Amazon, is not just that people are watching TikTok for mindless entertainment, although that is in our survey the number one use for TikTok. 43% of our survey panel of TikTok users said that mindless entertainment is the reason that one of the reasons they use TikTok. But really, it's used for so many more things. We asked, which of the following have you done because of a TikTok video in our survey? And 35% of people said that they prepared a new food or beverage recipe. 30% of people basically said they developed a new interest or hobby. 27% of people said that they purchased a new product. So, and in fact, even more than 10% of people said they traveled to another city or country because of TikTok. So it's really interesting. This is a great form of digital native entertainment, but it really is so much more. And that really speaks to its power.
Yeah, I thought it was really interesting that 22% of the people said that they use it for news, which was news to this old guy. One interesting thing that made me very happy about TikTok, I judge it, but almost no one said it gets them stressed out or sad. It makes them happy and amused was the overwhelming emotion according to your survey. Not the case always with Instagram. But Dan, your numbers also found a reminder. Facebook is still massively influential. 2 billion daily active users. And in terms of those asked who they could not live without, millennials and older, it was easily number one. We so often talk about the death of Facebook and the death of Meta. Your survey says not so fast.
Precisely, not so fast. You could say that perhaps growth has slowed for Facebook, both in terms of their user base and their revenue, but it's still the most popular social network on the planet. It has a lot of use cases. You think, when's the last time you uploaded a photo to Facebook? Maybe years ago. When's the last time you published an album of pictures to Facebook? Probably right after college or something like that. But there's so many more things that people do on Facebook they're not even thinking about, using their marketplace, using groups, I'm in a group for my car, my television, my camera, just enthusiast groups of people that have the same stuff as I do. And, we share tips and tricks. We ask, hey, what do you do when this thing does this thing? It's actually phenomenally useful. And it's a Facebook property that we're not even really thinking about the fact that it's part of Facebook, but there we are using Facebook every day. So it is tremendously useful. It certainly is having trouble with younger consumers though. And that's why you see both in the Facebook app and in the Instagram app, this very thirsty Reels product, trying to steal the magic of TikTok, and still yet to be determined if that's going to work or not.
Dan, you also asked the deserted island question that you asked the social media. You asked it when it came to streamers, and what topped the list was YouTube. That took me by a bit of a surprise. Maybe we're underestimating YouTube's role here when we think about the future of TV.
Totally. That was one of the more surprising things, not only because YouTube did so well on this question. Again, the question was, if you were trapped on a deserted island, so thank you, Mark Mahaney, for that inspiration, and could only access one streaming platform, which would it be? And YouTube was, and this is over 3,000 Americans we asked, YouTube was number one with 27%. After that, Netflix, number two with 26, and then kind of a steep drop off. You have Amazon, Hulu, Disney, etc. The streaming wars that people talk about are typically, you think about Netflix and Disney, maybe some Hulu, maybe some Amazon and Apple, but they're kind of in it for different reasons. Then the long list, and then you get to Paramount Plus and Peacock and whatever it is. YouTube is almost never in that conversation. And I think that at this point, YouTube is now underrated and underappreciated as part of the future of entertainment and TV. It is kind of a different product. The types of long form narrative, story and drama and comedies and that sort of stuff that you would watch on a Netflix or a network show. YouTube has more YouTube native content, whether that is vloggers or ASMR or short shows, whatever it is, explainers. There's some really great content on YouTube that wouldn't make sense probably on HBO or something like that, but it really, really makes sense on YouTube. And so it's a little tricky to compare them apples to apples, but I think the point is the consumer says that actually YouTube is their number one choice if they were to pick one of those.
Get your Yahoo Finance on YouTube, of course. The new consumer founder and editor-in-chief, Dan Frommer. Good to see you. Great revelations. Appreciate that. Coming up, Wall Street heading towards another down week. Find out which stocks are making the biggest moves when we come back. right, about the end of the trading week, Jared Blickery here with some stocks moving ahead of the closing bell. What are we seeing?
That's right. We're checking out Boeing first. It's up about 1/3% right now. And the industrial giant getting a boost on news that Air India close to a deal to buy 150 737 MAX jets, with 50 of those to be delivered immediately up front. Though our aerospace board is mainly red today, Boeing supplier Spirit Aerosystems is also in the green, got a little bit of a boost off that number as well. Meanwhile, we got to check out the EV space. Now, we're seeing mostly green, but not in terms of some of these Chinese stocks. Those would be clustered over here. We're seeing, for instance, some of these stocks such as Li Auto down 13%, NIO down 5%, Lucid Motors down 2%. And that says, I'm not seeing any fundamental news right here, but Lucid Motors is at an all-time low right now. And that's trading, all of these are up more than 50% from their highs, except Lucid. So let's take a look at that stock right now. If we check out a max chart, you can see there it is camping out below $10 per share. And I believe that deal came via a SPAC. So a little bit of luck there. We'll have to see what happens with that. And up next, we are going to check out the retailer space, and that's because retailer Costco reported earnings that came short of expectations, not only on the top line, but also on the bottom line. But you can see the stock still up about 0.5% there. The miss in gross margins pointing to a softening environment for the retailer. Meanwhile, Oppenheimer is saying that this was, quote, an essentially inline quarter for Costco, and that street estimates are too aggressive. Now, finally, in home builder news, well, actually not home builder, but home furnishing news, we want to check out RH, formerly Restoration Hardware. That stock is up 3% after earnings. Citi put it best. Here's a quote for you. A modest beat and guidance raise was never so ominous. And that's as the RH CEO, Gary Friedman himself, described a, quote, complete collapse of the luxury housing market. And this is amid near-term uncertainty as well. So Dave and Shauna, I think it becomes a question of, well, has RH seen the worst of times or the best of times? Gary Friedman likes to experiment, not a typical retailer here.
I'm glad you brought up that quote. I haven't seen this kind of drop since 2008, said Friedman, about the housing market. I was shocked to hear that. Very few real estate analysts across the country feel that way, but he obviously has a different look at it.
Yeah, and he was also saying it looks more like a crash landing to him, unpredictable right now, given that macro uncertainty. The fact that the stock is still 3% higher today, I'm a little bit amazed by that, because certainly if you take a look at his predictions, the guidance that we got from RH in terms of what we heard from the CEO, he certainly sees what could be a pretty rough time for the company over at least the coming quarters.
Yeah, well, they don't do any discounting. It's not like you're going to walk in a store and see a bunch of holiday stuff out there. He's doing it the old-fashioned way, and maybe it pans out, maybe it doesn't, but he's got his head to the grindstone. I will say that.
We will see how the slowdown in housing affects RH going forward. Jared Blickery, thanks so much. We are counting down to the closing bell on Wall Street. All three major averages in the red for the day and for the week. Dow now off 286 points. We'll be right back.
couple of minutes away from the closing bell. Let's bring in Yahoo Finance's Inez Ferre to break down the action. Hey, Inez.
Hey, Dave, some selling into the close. We are seeing the Dow right now down more than 300 points. The Nasdaq and the S&P also lower. So we are going to end near the lows of the session. I'll pull up a 5-day chart, though, so you can see all three major averages will be ending the week in the red. And when we look also at the sectors, we are seeing energy stocks, which are leading to the downside. And a 5-day chart will show you energy stocks also being the biggest laggard for the week. All 11 sectors of the S&P 500 set to close in the red for the week as well. Sticking on that 5-day chart, we are seeing the Nasdaq 100 stocks and the mega caps. You can see Apple for the week down more than 3.5%. Amazon also losing, and Tesla down more than 8% for the week. Here's the closing bell.
All right, well, that rounds out the trading week. What was a tough week for Wall Street? All three of the major averages ending not only the day in the red, right around the lows of the day, but all three of the major averages in the red for the week. And that is also the case for all 11 of the S&P sectors. Energy, the underperformer over the last 5 days. For a closer look at what we're seeing, we want to bring in Ross Mayfield, a Baird investment strategy analyst, and also Andrew Slimman, Morgan Stanley Investment Management Managing Director, and also Senior Portfolio Manager. A mouthful there. Andrew, let's start with you just in terms of the takeaway that we've seen over the last several trading days. Certainly all three of the major averages ending the week in the red. What do you make of it?
Well, I was disappointed in the PPI number today. I thought today could reverse the market selling off after a pretty good run over the last month or so. Look, we've got the CPI number on Tuesday, FOMC minutes on Wednesday. All this could reverse, but I think we're just working off a near term, a little bit of an overbought market. I still think there's a decent chance we get kind of a year-end push if we get good news on the CPI, which is more likely than PPI, or the FOMC continues to suggest they are, beginning to take their foot off the brakes quite as hard.
Ross, it could reverse next week. Do you expect it to, though?
Well, I think it all depends, as has been said, on CPI and what the Fed says. I think while the PPI number this morning was a little disappointing, it wasn't enough to probably shift what the Fed thinks they're going to do next week. If CPI comes in kind of a similar way, then you expect 50 basis points from the Fed, and the market can probably feel comfortable into year end. I think a lot of the rally was probably already pulled forward over the last 6 to 8 weeks on some of that softer inflation data. But yeah, I think we could certainly rally into next year. And then I think there's probably, a coming to grips moment with what's happening on earnings and where valuation should be. But I think that is a 2023 story. So pretty much two main data points, and they're both next week, and then we can get to year end.
Andrew, I know you said the FOMC continues to suggest that they're beginning to take their foot off the brake. What does that mean just in terms of the next two policy meetings and what we could expect then from the Fed next year? Has all of that already been priced in?
Well, I think what's really going on here is the yield curve that the Fed watches is now inverted, and they're worried that they're going to drive the economy, into a recession. So that has started to weigh on them at a time when you're seeing marginally better inflation. My view on next year is actually, it seems overwhelmingly consensus that the first part of next year is going to be weak. I actually think it's going to be strong, because I think what we're going to see is inflation continue to come down, but the economy remains far more resilient than what many people think. And one of the reasons I say that is because, the cyclical stocks, they would be rolling over hard if the economy was about to roll over in the first quarter, or the stock market was about to drop, 10, 15%. So I think you're going to have this combination of better inflation print, but the economy is going to hang in there for the first half of the year. I'm more worried about the second half when we get down to the 4% level and the Fed has to come, to grips with the fact either they're going to drive the unemployment rate up or they're going to back off on kind of their 2% target.
Yeah, that really is the big question, whether they accept something less than that goal, somewhere in that 3.5 to 4. Ross, what do you make of that? And given the strength of the consumer, it points to what early next year?
I think that's the exact right question to be asking is, does the Fed feel comfortable saying mission accomplished if CPI is heading in the right direction and gets to something like 3 to 4%? I don't think they would go as far as to adjust their target. I think that would be a credibility issue for them. But, if it's heading in the right direction, and if we know that there's this lagged effect from tightened monetary policy, will they be comfortable if inflation is in that range and don't feel like they have to go deep into restrictive territory and probably hurt the economy, send us into recession, obviously negative implications for stocks. On the consumer, there's this latent strength from, all the pandemic savings, all the reopening, but we're starting to see that wear out. They're drawing down on savings. There's tapping into revolving credit. And then, as was mentioned, the labor market is probably the key here. Earnings were strong. That's not what the Fed wants to see. But I do think there's a lingering confidence in the consumer sector from what has been a historically tight labor market. And the question is just, how far does the Fed have to go, bringing unemployment up, bringing job openings down to get to what they view as an acceptable level of inflation?
Andrew, we have heard the Fed talk about the weakness that we are starting to see in the housing market. RH CEO was on his earnings call after the bell yesterday saying that the housing market is the worst he's seen it since 2008. Do you agree with that sentiment?
Yeah, but the stocks aren't acting that way. What's interesting is if you go look at these housing stocks, they peaked long before the housing cycle turned down. They peaked when mortgage rates started to head higher. And they have stopped underperforming, not because the news is better on housing, because rates are lower, mortgage rates are coming down. So what you need, the point of this is there is a lag between the housing cycle and what's going on in mortgages, and these stocks respond to mortgages. That's why the stock's up today. I think that's the story is when I'm a portfolio manager, and when I'm looking for names, I want to buy stocks that have already gone through a recession. We're all talking about the economy, but there's a lot of areas that have already seen a recession, namely a lot of these housing stocks. They're down 40, 50, 60% peak to trough. That's already a recession.
Ross, your notes suggest a scenario in which we could have a flat year for stocks in 23. What could lead to that?
Well, I think, look, earnings estimates for 2023 have come down, but probably need to come down a little bit further given what we expect to be, pressure on profit margins and probably the consumer starting to fade a little bit more. At the same time, with rates where they are, valuation historically, has bottomed quite a bit lower than we saw in this cycle. So I think there's a world where maybe valuation stays, a little flat. Earnings have to come in a bit, but I do think a lot of the pain has already been priced into the stock market. So I think, there's a real likely scenario where you have a choppy year, maybe you have some weakness in the first half and strength in the second half as the Fed starts to ease, or at least gets to a place where they pause. But a volatile year that could, totally be moot by the end because earnings come down, maybe valuation expands a little bit, but it all equals out to kind of a flat year.
Andrew, another big driver in the news this week, obviously the reopening hopes in China, that boosting some of the U.S. listed Chinese stocks. Are you seeing any opportunity to invest over in China?
Yeah, I think, look, near term, they're very overbought. But look, you have two very, very important points. First is the dollar. If you look at how Asia ex Japan did, it outperformed the United States for a decade until 2018 when the dollar started to rally. And it has been a horrible relative performance to the U.S. since then. Now, the dollar has broken. And I think what gives me confidence is I'm seeing gold is rallying and you're seeing the emerging market currencies start to go up. In other words, emerging markets respond very much to dollar weakness. That's good news. And then secondly, what's going on in China is, the long-term goals of the Communist Party is common prosperity, moving people from poverty to the middle class. Can't do that under zero COVID when you're locking people in their house. So unemployment's gone up, income growth is going backwards. It was only a question of when, not if, they would have to pivot from zero COVID to pursue their common prosperity goals. So I think combination of a weaker dollar and China reopening, in my opinion, make China probably the best equity major market in 2023.
All right, we're going to have to leave it there. Andrew Slimman, Ross Mayfield, always great to have you. Thanks for joining us. Have a good weekend. All right, COVID cases are on the rise, and new data from the CDC revealing the Omicron subvariants are now responsible for more than 70% of new infections in the U.S. Yahoo Finance's Anjali Khemlani joins us now with the details. And Anj, what are the numbers looking like?
Well, 70% of the BQ1, BQ11, that's really what we're looking at. And those are the Omicron subvariants that are supposed to be immune evasive to a degree. Now, it's important to remember that the vaccines do still work to protect against severe disease and death, but this does increase the risk for those who are vulnerable, those who are over 65, and anyone who has any kind of potential to contract this disease and have a severe case of it. So that is where some pressure is building on hospitals. We also know that the New York, for example, just increased their sort of alert status and is now recommending masks indoors. Not a mandate, but it is a suggestion. We know that LA is weighing mask mandates, and the CD has reinforced their recommendation for mask mandates recently for masking rather indoors as a result of this rise in cases. And also important to point out that hospitals are under pressure right now as a result of this, plus RSV, plus flu. We know that that's what's been pressuring the system, and that's important to point out, especially because we know how much this is impacting the pediatric population, right? Kids are not finding beds when they get really sick because some of those beds had been moved into the adult population, and so they're sort of missing, and there's this whole ongoing sort of hospital structuring system in play.
Hearing a lot about that in Hartford and out my neck of the woods. Elsewhere, a U.S. judge has dismissed almost 2,500 cases that allege a link between Zantac and cancer, and that judge blasted some of the assumptions behind it. What's the impact here?
So right now, as it stands, that's great for the cases that were affecting for Zantac for the federal level. There are some state level cases that are set to take off starting in February, the first one in California. And this goes back to, on this show in August, we talked about how that first case was voluntarily dismissed after the FDA and outside experts noted that whatever the results were for this lab that brought on the case were unfounded. They couldn't replicate the results. And so what ended up happening is this judge dismissed it based on that, saying that they couldn't replicate it. It wasn't valid, essentially.
Well, hopefully it gets back on the shelf. I need a lot of Zantac in my life.
A lot of heartburn.
A lot of heartburn for this guy. Anjali Khemlani, great to have you here. Thank you so much. All right, coming up, Yahoo Finance shines the spotlight on small business. We'll speak to small business owners about the challenges they're facing and what they're doing to overcome them. Next.
Welcome to Yahoo Finance's Spotlight on Small Business. Small businesses are the backbone of the American economy. These are the businesses that are owned by our neighbors. They line our streets and contribute to our communities. To give you an idea of how popular small businesses are, a recent Gallup poll found that small business to be the most trusted institution in the U.S. So that's why over the next hour, we are going to discuss the issues that small business owners are struggling with, as well as the strategies that they are using to succeed.
Lot to get to. The U.S. consensus counts 32.5 million small businesses in the U.S. That represents the heartbeat of our economy. Though many are thriving out of the pandemic, numerous challenges await, including higher interest rates, the labor shortage, supply chains, regulations, access to capital, just to mention a few. Isabella Casillas Guzman is tasked with removing those impediments, or doing her best to do so. She's the U.S. Small Business Administration Administrator. Great to have you here. We hope to address all those issues. But when you talk to business owners across the country, what is their single biggest concern today?
Well, and our small businesses have been remarkable and resilient and have really helped to spur that recovery, the historic economic recovery that we've seen in the Biden-Harris administration. But across the nation, no matter what industry, they continue with that grit and resilience and hope for the future. They're about creating their dream of business ownership. And so obviously the challenges in the marketplace that they've been navigating since the pandemic began persist. And a lot of times it's finding the right employees and retaining those employees, or dealing with supply chain disruptions, trying to pivot their model so they can keep on serving their customers, which is what we all rely on them to do. And so they've obviously needed that extra support, and that's what the SBA is all about, is making sure they get the funding that they need to grow their businesses, as well as the resources to figure out how to improve operations or expand their revenue base.
Yeah, Isabella, speaking of funding, PPP was largely successful when you take a look at the fact of how many businesses, small businesses, the PPP loans helped. $755 billion were loaned out to 11.5 million businesses nationwide, helping to retain 86 million jobs. When you take a look at the funding that's needed today, how much improvement have we seen since we hopefully have turned the corner on the pandemic?
Well, PPP was a lifesaver for our businesses. And as they continue to try to navigate the pandemic, those extra relief funds through the American Rescue Plan were really critical to helping especially the smallest of the small, which is, what we focused on in the Biden-Harris administration, is helping those who may have been shut out of early relief get that capital. They've had to sustain quite a bit in terms of the length of time dealing with this disruption. But our small businesses, we are trying to create those pathways to capital if they need it. And, if they were able to access grants locally or other support, that's been really critical to helping them carry through. But since it's the holiday season, I'd be remiss to say that really small businesses across Main Streets are really dependent on a strong holiday season. So as we think about spending our holiday dollars in shopping this season, thinking of our small businesses who have local employees and that benefit the local economies, is really where we should be spending our dollars.
Indeed, it is difficult out there, and we mentioned a couple of these issues. If we could drill down a little bit on the two biggest factors I'm hearing from small businesses: one, that higher interest rate environment, and inflation. How are they impacting our small businesses across the country?
Well, just starting with inflation, obviously tracking that there's been some moderation, and so small businesses have had to, in many cases, pivot in their product mix to be able to still offer competitive prices to their consumers. They've had to figure out how to increase prices and at what time, and how to continue to market and support maintaining their revenue base despite price increases. And so it's been a challenge, and I think what we've positioned to do is help businesses manage to that bottom line. We have over 1,600 centers across the country who are helping small businesses with free advice to figure out some of those daily challenges that they might be dealing with inflationary pressures or supply chain disruption. I think that the interest rate environment, obviously, we're continuing to see strong demand for SBA's products. We offer affordable loans to small businesses in both fixed and variable rates. And so with small businesses needing capital to maybe leverage opportunities on the horizon with those historic investments in infrastructure or the future energy of America, I think that's where small businesses need to make sure they're exploring all their options, finding lenders, including those who work with the SBA products, to get the capital that they need to grow their businesses.
Isabella, you mentioned labor shortage as being one of the issues that's facing small businesses these days. There was a recent ADP survey finding that 52%, over half of small business owners, say the biggest challenge right now is finding qualified job candidates. It's a tough competition out there when you take into account the wages that workers are demanding today. How can small businesses better position themselves in order to attract that top talent?
Mm-hmm. Well, first and foremost, I think that, within our small business development centers, our women's business centers, our SCORE mentors, and our veteran centers, we try to provide that support, connecting small businesses to the workforce development resources that are available to them so they can find talent and take advantage of any special programs to help them retain those employees as well. I think that now more than ever, their ability to manage workforce, to create a culture and environment, to retain employees is critical. And so that strategic advice around HR challenges, benefits that can be offered, are things that we offer through our advisory network. We want to make sure that small businesses have access to all the technologies as well as the strategies so that they can compete with large firms for those for those employees around their communities. And honestly, as a result of PPP, so many small businesses were able to retain their employees. I also speak with so many business owners who have built up strong loyalty. They are like families in many cases amongst their employees. And so those types of culture differentiators is really what helps small businesses grow and retain their employees.
Isabella Casillas Guzman, great to have you, Administrator of the U.S. Small Business Administration. Thanks so much for joining us this afternoon. Well, coming up, we will take you to a holiday market in New York City to find out what traffic has been like this year. And we will also tell you how the COVID pandemic changed the face of small business. We'll be right back.
beginning to look a lot like Christmas here in New York City at Union Square's holiday market. Small business owners are facing big hurdles, including inflation, which is at its highest level in over 40 years. So high, will people actually shop through it? Yahoo Finance reporter Danny Romero spoke to some of the smaller shop owners to discuss their outlook on the holiday season. What did you hear?
So this holiday market at Union Square, it's a tradition. It's been a tradition for 29 years. And this year it's back in full swing. It's also an opportunity for these small business owners to really end the year making a little bit more than what they started with. Take a look.
It's a very New York Christmas at Union Square. Its annual holiday market has returned, and so have the shoppers.
It's very festive and it's fun to be outside, and it's really great to be at the market and be supporting local artists and small businesses.
And for some, it's been a treat. Brandy Odie, visiting from Georgia, found a very special Christmas present for her son.
I'm very excited about this gift, actually. I'm going to put it in our suitcase and then as soon as I get home and wrap and put it on the tree. He won't know what it is. He didn't ask for it.
With more than 180 booths, it's hailed a must-visit destination for unique gifts and created by local craftsmen and artists.
I sell everyday jewelry as well as bridal and special occasion, and I basically make everything by hand using hypoallergenic metals and freshwater pearls, Baroque pearls, and semi-precious gemstones as well as Swarovski.
It's this foot traffic and people shopping local at these marketplaces that's kept this small business owner afloat.
I think like the brick and mortar, it's tough to get foot traffic that these types of markets get. It's one of the best places to sell in the entire world in terms of foot traffic. It's constant.
But this year, it has been a bit more challenging.
I've had to put all my prices down actually because I want to be able to have things that people can afford, because my demographic is people from age like probably 20 to and up, and a lot of us are young professionals and we have student loans. We aren't able to buy a $75 pair of earrings. So we like to say our average price here is probably around $50, and it's a splurge from a lot of people that are just barely making rent, especially in New York where it's literally just the rent paycheck to paycheck for everyone, even people working in the corporate world.
While some try to weather the storm, others are debuting their products for the first time.
This was a pipe dream. I wanted to be here for over 10 years. It's very sentimental. I used to go to Parsons. I graduated in 2010. And so I would come here all the time and look at all these artists.
However, the environment has changed since then. Customers are cutting back on spending amid high inflation.
I will say I have noticed that this year people are buying like lower amounts from my space. Instead of spending $100, they're spending maybe $40.
There's good news though. The National Retail Federation estimates retail sales 6 to 8% higher than in 2021, while a Gallup poll shows Americans plan to spend more on gifts than they have in the last 3 years. That's giving hope for this vendor, who's paying a pretty penny to have his booth open at the holiday market.
On average, I'd like to make like over $1,000 a day, like a couple grand, between that ballpark.
And you can hear right there that these vendors are really relying on the support and the sales from this holiday season, but also, a challenge that they've been facing, particularly this week, is the doom and gloom. It's been kind of rainy these past few days, so they've told me that a challenge that has really impacted and weighed on their sales has been the weather.
Yeah, certainly could be challenging here since we know how critical the holiday shopping season is. Danny, any idea what some of these small business owners, what their outlook is as we look further out from the holidays and into the new year?
Obviously they have a lot of optimism still as we go into this new year. But like you heard, one of the small business owners, she's had to cut some of her sale prices in order to meet her customers' needs. That just tells you the environment that we're currently in right now. And so another sticker shock that I heard from some of these vendors has been the fact that to have their pop-up booth open, they pay $18,000. And one of these vendors—
That's for the season.
That's okay. For this market place.
Month, right?
Yeah, yes, for the holiday market, yeah. And one of these vendors told me that she needs to make over $30,000 in sales to cover her operating costs.
Wow, that's very, very expensive.
And that's hitting that mark.
Yeah, exactly. And that's a lot of money for some of these businesses that clearly, I would guess, don't have it at this point.
Yeah, like you heard, the price ranges are from $10 to $50. So
a lot of sales. All right, Danny Romero, great stuff. Thanks so much. Well, despite uncertain economic times, over 4 million new businesses were started in the first half of this year. So how are all these new businesses handling everything from payroll to benefits and even hiring employees? That's where companies like Gusto.com comes in. And we want to bring in their principal economist, Liz Wilkie. Liz, it's great to have you. So you're helping small businesses when it comes to payroll, when it comes to benefits. I'm curious just what your conversations have been like with these small business owners over the last several months.
Yeah, it's a great question, and I'm happy to be here. Gusto provides HR payroll and benefits for over 200,000 small businesses in the United States across all industries. So we hear a lot all across the spectrum. Some businesses are really excited about new opportunities that are coming up for them. Some businesses are really struggling. We've seen industries bounce back in leisure and hospitality and healthcare and education, where there's just been huge demand from the pandemic, and businesses are really taking advantage of that. And we've also heard from businesses that are doing more personal services and in-person services that really took a hit during the pandemic and are trying to figure out still, what their next move is and what they look like in the future.
And just about, Liz, every aspect of life has been transformed really by the pandemic. What's been the biggest change or evolution for small business?
Yeah, for new businesses in particular, in 2020, we really saw most new businesses in the retail and trade services, like had sort of been happening in years prior. And then in the last survey that we did, we really found that most new businesses, or sort of a plurality of new businesses, 42% are in professional services. The people that are seeing these opportunities are, like you said, sort of taking advantage of the fact that the whole world has changed. They're much more digital. They're going into sort of high value services. They are taking advantage of opportunities, but they're still, facing some headwinds. Business owners are the most agile, adaptive, and resilient people, but they still are facing some real struggles. Talent and getting the right talent in is really the biggest thing that we hear from them, as well as sort of the rising costs of things because of inflation.
You also say, though, Liz, the face of small business, of entrepreneurship has changed. How so?
Yeah, so women are really taking advantage of the opportunities that have come from the pandemic. They started 49% of the businesses, nearly half in the last 2 years. From prior years, from government data, we know that number hasn't been much above 28% since before the pandemic. Also, Black founders were about 3% before the pandemic, and now that number has tripled. So really just people are seeing new opportunities, and they are sort of thinking about how to take control of their lives and to build that sort of independent entrepreneurship life for themselves. We are really seeing new business owners look drastically different from business owners prior to the pandemic.
And Liz, the reason why so many small business owners are starting a business, has that changed as well?
Yeah, I mean, most of them have started a small business because they are seeing opportunities from the pandemic. They have quit their jobs because they are seeing opportunities that the pandemic is offering up. They are seeing opportunities to have new types of workers and workforces that will allow them to do their businesses better. Gusto is part of that. Gusto is part of the digital transformation, and the fact that Gusto exists to do all of these sort of functions that you might have had to do with pen and paper before is really also helping small businesses and entrepreneurs get right off the ground and sort of start a business with very little capital, and to just sort of from day one just look like a smoother, much bigger business than they would have before the pandemic. And I think that really is sort of a sea change that we're seeing.
And Liz, we hope to avoid an economic downturn, but certainly with all the big bank CEOs and economists talking about one, what are the best tips for those small businesses in the eventuality that we don't get that soft landing?
Yeah, I mean, I think that, businesses are really sort of trying to plan for all scenarios here. And, one of the real interesting things about this economic time is that we are thinking about sort of a recession or a pandemic, but We will never have entered a recession where there are almost 2 jobs for every unemployed person in this country. And what we hear time and time again from small businesses is that they have such big talent challenges. So they are thinking about, how do I manage my talent costs? How do I keep workers that are good, happy, and here? How do I avoid having to try and get new workers in if I can keep the ones that I've got? And so they are sort of really trying to manage costs. And they are also really trying to think about how to invest in the talent that they have and attract new talent. And they're doing that by offering new benefits. And they're doing it by seeking new sources of talent, both in contracting and in offering remote work, because it's really influencing the types of talent that they can attract into their small business.
Remote work at the top of the list you hear for people looking for jobs right now. Gusto principal economist Liz Wilkie, very interesting conversation. Appreciate that. Coming up, a small business owner tells us how she uses social media to grow her business, one that has more than $1 million in revenue this year. Stay tuned. Estimates suggest nearly 220 million Americans will shop online in 2023, representing more than 20% of retail sales worldwide. And no, it's not all on Amazon. Our next guest, Mimi Striplin, is the founder of the Tiny Tassel, a jewelry, clothing, and accessory store in Charleston, South Carolina. What a wonderful town it is. Nice to see you, Mimi. You've seen your business skyrocket recently since going digital. Tell us how it worked for you.
Yes, I started online back in 2015 in my apartment kitchen making tassel jewelry, and we have grown and evolved this business in so many ways to now offer a selection of clothing designed by my mom, more styles that we're able to scale and keep up with our customers' demand. And it's been really cool to use social media platforms like Instagram Shop and live selling to reach our customers.
Yeah, Mimi, when you try to quantify, I guess, the impact that social media has had on your business, what do you attribute that success to? How have you been so successful on social media? And some tips that you can offer some other small business out there in terms of how they can grow their presence.
First and foremost, we show up consistently on social media. Even if we have a lower sales day or a really high sales weekend, our customers are expecting us to show up there on Instagram for our live shopping events. Typically every Sunday afternoon, we're launching new products, sharing restock, sharing my favorite things in the shop. And one of my biggest tips that I give other small businesses is just try it. Get out there, let your customers know. It's such a fun way to interact, whether you have a brick and mortar presence like we do, or if you're just online. It's a great way to connect with them live and be able to reach them and convert customers to actually purchase from your site.
And other platforms have helped you along the way. Shopify, PayPal. Talk about how those have helped grow your footprint and how others might be able to use them.
We have been using Shopify for years now, and it is such a low entry, low barrier, low risk platform for us where any small business can get on, set up their website, not have to pay a large sum of money to get it up and running. And it's allowed us to scale using different apps and programs that integrate with Shopify. We've been able to track our inventory, to sell online worldwide, and of course to sell on these social media platforms by using Shopify. And PayPal just adds an extra layer of convenience for us and for our customers. They're able to check out seamlessly, use PayPal, and we know that these checkouts are safe and they're quick and easy.
So Mimi, in addition to the e-commerce business, you mentioned you have a physical store in Charleston. Talk to us just about the importance of a storefront and whether or not you have plans to expand your brick and mortar print.
Our storefront is so special. It is such a happy and joyful space here in downtown Charleston, and it has served as a way for us to bring our online experience to life. And so many of our customers visit Charleston. It's such a destination city, and they get to walk in and really experience our shop, our products, our customer service in real life. And it has been so special for us to welcome customers in from all over the world, to share our favorite styles, show them clothing in person, have them try it on, so then they can leave and be the biggest fans of the Tiny Tassel, go back to their town, or let it be here in Charleston, tell all of their friends and family members about this amazing small business that they get to shop.
Mimi, millions of businesses around the country just like yours. They open up the doors. They have a cute store and clothing and people want, but they don't know how to get the word out there. Just give those people step one in growing your business from that single store, brick and mortar.
Step one would be to just shout it from the rooftops who you are. Don't be afraid to tell others about your business. Be really excited about it, because the energy that you have about your store, and especially your storefront, will create such a buzz around it, and others will just feel like they have to get there. They have to come in and support your business. And of course, rely on your community. Ask others to share. Ask others to pledge to coming in and shopping and buying just one Christmas gift from your storefront. And just by doing that, connecting with your customers and followers in that way can make such a huge impact on business.
Well, other small business owners should be listening to your advice. You had over $1 million in revenue this year, consistently growing over the past couple of years. Mimi Strickland, great to have you, founder of the Tiny Tassel. Thanks so much for joining. All right, well, coming up, we speak to two restaurant owners about how they are dealing with everything from rising costs to hiring. And as we head to break, Yahoo Finance's Brooke DePalma went to one New York bakery to see a boom in traffic, foot traffic, thanks to social media. Let's take a look.
We're here at Lafayette Bakery in NoHo to check out the viral Supreme croissant. Now, lines form 3 times a day at 8, noon, and 4. And rain or shine, there's already a line forming.
Instagram and TikTok said it is the best croissant you will ever try. So here I am waiting in a 3-hour line to get a croissant.
Foot traffic's insane, obviously. We started by selling about 36 a day, and now we're at about 340 a day. And that's pretty much our capacity of what we can bake in our kitchen.
I was lucky enough to give the Supreme a try. worth waiting in line in the rain? Well, that's up to you, but it really is an incredible croissant.
I think it's a great success story, like especially after being closed, after what all the industry went through during COVID. It took like 3-4 weeks to take off, and after that it's just been scaling and trying to make more of everything, just to keep up with the demand.
The pandemic has had a devastating impact on the restaurant industry. The National Restaurant Association estimates about 90,000 restaurants nationwide have either closed permanently or long-term because of the pandemic. Joining us now with an inside look at how the industry is faring today, we want to bring in restaurant owner Tia Jackson. She's behind TJ's Southern Gourmet, which is now located outside of New York City in New Jersey. Tia, it's great to have you. Your family's restaurant, I know, has been around since just around 1990. You recently moved from New York City to New Jersey just before the pandemic. How is your restaurant faring today?
Thank you so much for having us and spotlighting the industry. Today, honestly, we're one day at a time. The restaurant industry is, a tough business just to begin with. And for us, when we started here in Englewood, New Jersey, lucky us, we started just before the pandemic. The response has been favorable with the community, but with the pandemic, rising costs, rising labor costs, it has been extremely difficult.
And those costs, you say, have doubled the cost of doing business, of course, because of inflation. Where are you seeing those costs rise the highest, and how many of them are you able to pass on to the customer?
Yeah, that's a great question. It's been difficult because we try to hold, without passing the cost to our customers, because they too are very price sensitive. And a business like ours is very community oriented. And so we're seeing a lot of it in, what you're seeing it in the grocery stores, and eggs, and which are triple the cost. What cost me $20 is now costing me $100. And, it's very difficult. It's become difficult to not pass those costs, or at least share the cost with our customers, who for the most part understand.
And Tia, you made some changes to your restaurant, to your business. What have you done in order to navigate this very uncertain and challenging time?
Yeah, so we had to pivot upon pivot, as you know, a lot of us have done during the pandemic. And so now we are trying to just change our model a little bit. People are returning back to work, and there's companies out there who are looking to bring our restaurant to their corporate offices. And so we partnered with some of these companies to focus more on corporate catering, and literally focusing on that a majority of our days, and then allowing us to gather, as we love to do here at TJ's, Friday, Saturday, and Sunday, and hoping that will give us a nice balance in time over time to get through this hump.
The word pivot has been often used by businesses across the country over the last couple of years. What has been the biggest thing you've learned, the biggest lesson you've learned through that could help other business owners? Tia?
Know your numbers, have balance, and you've got to, for business owners, I'm a SCORE mentor, and one of the things that I think has helped me is knowing why I started this in the first place, is connecting with our customers and reminding myself every day that it's bigger than even the food that we serve. It's about connecting with our clients and serving great food.
And Tia, we've been talking to a number of business owners this afternoon. One common theme, one thing we keep hearing about is the challenge that it's been to hire the workers that you need. Are you experiencing this? And I guess, what are you doing in order to get some of those workers through your doors?
Well, it's very difficult. That's the other issue. On any given day, and it's part of our success, right? So my mom and I, we've been doing this so long. So literally, we know how to cook. We know how to serve, and we could also be your dishwasher for the day, because it has been difficult hiring. It costs more to hire people, and then a lot of them are not even returning back to work for various reasons. And so what we've had to do was almost try on any given day, be all things to all people, which leaves me as a single mom exhausted and not able to be fully strategic in my business because I'm at capacity. So I'm just hoping that this is over soon, but we're doing our best to try to have the balance that we need to get through it.
Well, we better tell everybody what they can eat when they come out and see you. What's the best thing on the menu?
I think the most popular people love is our fish and grits, our chicken and waffles. Everybody loves biscuits with sausage gravy. And that's what's so amazing about TJ's. It's authentic, it's delicious, and you feel good while you're eating it here.
I was going to go for the barbecue ribs, but you swayed me a little bit there.
Yeah.
We'll come
Everybody has their thing, right? So you got to try that too. I'm sorry.
We'll come see you, Tia. We appreciate you being with us. Thanks so much.
Thank you so much for having us.
Sounds like she has a customer there. All right. The labor shortage has had a big impact on restaurants. The industry is 462,000 restaurant jobs below pre-pandemic levels. That's according to the National Restaurant Industry. But while some establishments are cutting back, others are expanding. The Pancake Pantry in Nashville, Tennessee opened a new location 1 year ago, doubling their footprint. Chip Bradley is the managing partner. He joins us now from Music City. Nice to see you, Chip. How is business? What have you learned the last couple of years?
Yeah, great to see you, and thanks for having us on today. You know, through the last 2 years, we've learned a lot about how restaurants have to adapt quickly. If you did not adapt quickly at the onset of the pandemic, then you were pretty much dead in the water. So we adapted quickly. Fortunately, we've been in business for 62 years. So we've got a great following with our locals, with our tourists alike. So we're very fortunate in that regard.
Chip, how have you adapted? What are some of the things that you did in order to make your restaurant successful over the past couple of years?
You know, we really focused on to-go service. We started with an app that we're allowed our guests to order online. We partnered with DoorDash, et cetera. Since the pandemic has pretty much ended, we have gone away from our DoorDash service. We have still doing a lot of to-go orders at both locations, and that's been one of the greatest parts of the pandemic. Is it's allowed a bigger reach for our guests that can't come in.
We talk about all the challenges facing small business owners across the country. To you, what remains, despite the hop in economy there in Nashville, what's the biggest challenge for you?
You know, the biggest challenge in the Nashville market, and this is pretty much everywhere, is the cost of food. You know, 1 year ago, one egg cost me 10 cents. Today, an egg cost me 37 cents. So it has, you know, gone up 3 times, almost 4 times from when it was 10 cents a year ago. And then also labor. Fortunately, we are 99% staffed at one of my locations and about 85% staffed at my other location. But just like the cost of food is going up, the cost of labor is going up. We're paying substantially more per hour than we've ever done. So, you know, those are the 2 biggest things that hurt the Nashville market.
You're forced to raise wages in order to get new workers through the doors. Chip, what are you seeing just in terms of staff turnover? Has that also been an issue in terms of employees leaving for other opportunities?
Sure. Well, again, you know, we're very fortunate. We've been open for 62 years. I've got employees that have worked for me for 45 years, some for 27. And, you know, at our original location, we don't have a lot of turnover. At our new location that's been open 1 year in downtown Nashville, we do see a little bit more turnover because there's more restaurants that are right next to us, et cetera. But, you know, we try to have a great place to work. We offer uncommonly good pancakes with Southern hospitality, and that's the kind of staff that we hire. And, you know, they make great money doing it. So we typically keep our staff.
Oh, we got some mouth-watering video on our screen right
good.
now. I was already on the menu
Yes.
looking at the chocolate sin. Chip, we talk a lot about inflation. I'm curious what you're seeing from the consumer. Are they cutting back? And are they cutting back on tipping as well?
Again, I'll keep reiterating being fortunate. You know, 62 years, one of our values is being a place of value. So, you know, our menu items aren't that expensive. So luckily, we have not seen inflation hurt our guests coming in the door. And in fact, tipping, I mean, it's our service staff makes phenomenal money. And that's one reason why they stay here. And, you know, to open a second restaurant in a pandemic is unheard of. And we have been very successful this last year opening our restaurant.
Yes, it is. We've lost 90,000 restaurants from pre-pandemic. Chip Bradley, great to have you on. Checking out the pigs in a blanket, the chocolate sin, the Caribbean pancakes. I don't know which one at all. We'll come see you.
23 different varieties. So you name it, we can do it.
Sounds good, Chip. Appreciate you coming on with us.
Thanks. Appreciate you.
A tax rule change could have a big impact on anyone who's making money online, including small businesses. We have the details for you next.
Hiring struggles have been a pain point for companies during the pandemic. Small businesses in particular are having an extremely hard time amid this very tight labor market. Yahoo Finance's Carrie Hannon is here with more on this. And Carrie, what is the hiring landscape here for small businesses?
Yeah, hi, Shauna. I have spent the last couple of days calling around small business owners around the country, and I looked at the BLS numbers. And, here's the thing, about 80% of the 10 million jobs that are currently open are for small businesses. I mean, we've got a tight labor market, and overall, it's getting a little bit looser, but not much. And for the small business owners, it's been really a struggle trying to hire people. The thing is, they've done the things, they've kind of cut back on their days or, hours, all those kinds of things. But what it really comes down to is trying to find workers. And I spoke to one woman in Youngstown, Ohio. She has One Hot Cookie is her store. And, she told me, the thing is, I can hire people. She hired 4 people in the last 3 months, but she only has 1 less. So it's really retaining them. So the 2 things that seem to be coming into play here is, and she raised her wages by $2 an hour to help attract people. So she said it's not so hard necessarily attracting, but retaining. And so what's happened is small businesses can compete in many cases on wages. They've really tried hard to ramp up there, but it's the compensation. They can't offer the benefits that the big companies can offer in terms of, let's say, healthcare, health insurance or employer provided retirement plans. So that's where they really fall back. And it really is, quite a struggle for them right now. And as we head into 2023.
And it may be difficult to characterize, Carrie, but what is the sentiment you're hearing among small business owners right now?
Yeah, Dave, here's the thing. They're optimistic. I mean, they truly are. A new study came out from the Bank of America that really looked at this, and they found that 66% of the small businesses owners that they spoke to say that they're going to increase revenues next year, and about half plan to expand operations, and 2/3 say, they're ready to weather a recession. So this is really fantastic, sort of an optimistic outlook for the small business, given what they're struggling with. And I'm going to just jump back to my gal at One Hot Cookie. What she told me is that for her, what she's done is she spent the past 2 years, really ramping up her online business, her mobile units. So she has more opportunities. She got a warehouse so that she was able to take advantage of price cuts, and so she has more supply, so not as dependent on the supply chain going into 2023. So she's looking for a pretty good year in 2023 because she's taken these opportunities to really move her business forward, so she is prepared.
And because cookies are on fire right now. I think it was cupcakes and then it was boba tea, and right now cookies are everywhere, man. Carrie Hannon, good to see you. Thanks so much. All right, small business owners who use fintech platforms like PayPal, Venmo, and Cash App to complete transactions must be mindful of a new reporting rule from the IRS. As a result of the American Rescue Plan Act, anyone earning over $600 for a business-related transaction will have their income reported to the IRS. Now, this is a significant change to prior policy where Americans only reported payments over $20,000 to the IRS. To help us explain what this means for business owners, Dan Geltrude & Company founder joins us now. Good to see you, Dan. What do we need to know, and why was this change made?
Well, let's start off with this. The reason why this is getting attention right now is because it's effective for 2022. So now that we're right at the end of the year, everybody's saying, wait a minute, this is happening? This was part of the American Rescue Plan. And basically what it said, as you said before, transactions now, gross transactions, over $600 are now going to be reported to the IRS on Form 1099-K. And the reason this is important is because the IRS gets that form and then they match it to your tax return. Now, when it doesn't match, well, that's when you hear from the IRS. But this is problematic. Let me give you an example. Let's say on eBay, you sell something for $1,000. Now, that's over the $600 new threshold, but you paid $900 for it. So your profit was only $100. But on your tax reporting, it's going to say $1,000. Now you, as that small business owner, let's say, you have to have that support that it costs you $900 so that you're only taxed on the profit of $100 and not the gross of $1,000. So you see what the problem is here?
Yeah, Jen, I mean, it's hard to kind of, I think, grasp at exactly the impact that this is going to have on small businesses, because when you take a step back, it looks like it shouldn't really be that huge of an impact given the way that it seems like an adjustment in reporting. But I think a lot of people, a lot of small businesses, a lot of entrepreneurs, when they're starting their new business, they're a little bit intimidated by the tax system and what they need to do, how they need to position themselves in order to best, I guess, capitalize and take advantage of certain opportunities that they have. So if you had one piece of advice for small business owners when it comes to their taxes, what would that be?
Well, for right now, what I would say specifically related to this rule, you need to keep all the supporting documentation to be able to prove out your income, because if the IRS comes a-calling, the burden of proof is on you. So when they say, like in my last example, you had $1,000 of taxable income, you need to be able to prove, wait, I had $900 of cost, my profit was only $100. So the key here is to make sure you have all the supporting documentation for these transactions. And that's burdensome.
Burdensome is the word, and this is why, Dan, so many feared that story when we heard about 87,000 new IRS agents getting hired. What are you hearing from small businesses across the country when it comes to their fears of added taxes and regulations, what they need from the government?
Well, anytime that you have those three initials being spoken of, IRS, you have small businesses that are very concerned. Look, small businesses don't always have the resources to be able to keep everything, let's say, in the type of order that a large company with an entire accounting department would have. So there's always that fear, not necessarily that you're not paying your proper amount of taxes, but that you may have simply made a mistake. And now you're in trouble. So that's really the big fear that small businesses have. Do we have the resources to really be able to defend ourselves if we're up against the IRS? And for the most part, the answer is no.
Dan, real quick, I guess the most common mistake that you see small businesses making when they do file their taxes.
Well, depending on how they go about their taxes, but the biggest mistake that I see is them not understanding deductible expenses. And what ends up happening is they end up actually paying too much tax because they're not aware of things that they can take advantage of as far as deductions.
Very important advice there. Dan Galtrude, great to have you. Thanks so much for joining us this afternoon. Well, our final thoughts on the state of small business. We're going to round up what stuck out to us from all the small business owners that we have spoken to over the last hour. We'll be right back.
Well, so often here at Yahoo Finance, we focus on big public companies in the stock market, but it's been a pleasure today hearing from small business owners who are, to your point, the heartbeat, the backbone of our economy. We talked restaurants, we talked retail, taxes, government, you name it, across the entire spectrum. And to me, it's about one word, and it's something we could all learn. It's pivot, and we heard that from restaurant owners, that you have to be willing to pivot given the changing economic times. So many had to do that in COVID. They had to learn to be more nimble. They had to learn to deal with smaller staff. They had to be more digital, which is probably number one. We all should learn how to pivot and not be so stuck in our ways. And in particular, as we face what could be a bit of an economic downturn, going to be looking at an entirely new pivot as well coming up ahead.
Yeah, certainly. It's very important to be nimble. What really stuck out to me with speaking with so many business owners has been the fact that they are so resilient during this time. Yes, they have had to pivot. They've had to change their business. Right now, they're coming out of the pandemic, particularly for the restaurant owners, and they're navigating what is going to be a very challenging couple of months. Not only do many of them not have enough workers, the workers that they need in order to meet customer demand, but customers are likely going to be pulling back on some of their spending given the recessionary environment. So they're still very resilient. They're very positive. They're putting one foot in front of the other, and they're making the changes that they need to survive during this pretty uncertain time.
And it was nice to hear Carrie Hannon say optimism. They are optimistic.
They are
about
very
what's
optimistic.
coming.
We always love to hear that. All right, well, that will do it for us today on our Spotlight on Small Business. Thank you so much for joining us.